Again, a warm welcome to all our viewers. If you're just joining us right now, you're watching the China Show. We're taking you live, and we're live here out of Beijing, the live press briefing out of China's economic planner, laying out so far what mostly have been implemented and the details of implementing more fiscal push and further support to the economy on one hand. On the other hand, as you have markets that are at least onshore opened up 11%. We have since that point in time given up most of the gains. We're still up though 3.5% after being shut for about a week. In Hong Kong, the story is completely different, where we have been rallying for a week, and as things stand, the Seng Tech Index you see on your screens is now on track for the worst day since the index inception back in 2015. We're nearing, if not already, about 10% losses, 10.7% losses now on the Hang Seng China Index. Is this simply repositioning, or, and this is speculation, are the markets somewhat disappointed in what they've heard so far here, given that, of course, markets have rallied 30 to 40% from the bottom over the course of just 3 or 4 weeks? Let's bring our guest out of Shanghai, Shen Yi, CEO of Shanghai Shen Yi Investment, a hedge fund manager based in Shanghai. He was also the founder of the Goldman Sachs ETF team in Europe, and of course a manager at Millennium Management. Shen Yi, a pleasure to have you on the show. Thank you for joining us at such an opportune time with markets where you are reopening from this week-long break. I need to get straight to it. Is there a level you think of disappointment, question mark, with the way prices are trading at the moment, or how else should I be looking at the markets right now?
I would say it's not a disappointment. The market is in the waiting mode. Obviously, the market trade ahead of the financial numbers and the economic numbers. So people are waiting for a detailed figure. Is that going to be 1 trillion, 2 trillion, 3 trillion, or somebody said 10 trillion? If we have a 10 trillion, we're a huge rally. If it's 1 trillion, then we can call that a disappointment on the numbers.
Do you think we're actually going to get any sort of numbers today, Shen Yi? It seems like no one there from the Ministry of Finance is there. And does it matter? How much does it matter to the market that we actually get an actual number of how big this fiscal push is going to be?
I'm just taking an educated guess. I would say we start with the central bank, and we follow with the financial regulation and the CSRC. Now the government are talking about implementation of all these measures. The number itself, my take, will be announced by the financial administration. So we'll see when the news conference will be launched, hopefully in next day or two. So we'll know the figure, and the market probably come back into a rally mode.
Right. How would you trade this at the moment? And what investment advice would you give, whether that's for long-only investors, that's a separate advice, or to the people, for example, in your hood of the market, which is quants, for example?
Okay. Our advice to our investors will be the asset allocation will be in the two part. One, we call that a low volatility absolute return strategy, and then we'll be focused on market neutral type. So right now it's a great opportunity because you have the index future trade at record basis, and the volatility is sky high. So that'd be a great opportunity. You can use that for the replacement of these long bonds. And also the second one will say we need to take some probably more positive mode towards the equity market. Then in that sense, I would suggest, my suggestion to most investors is take the ETF or take index futures, because at this moment we do not know which sector or which stock will be benefiting from the new policy or the new fiscal stimulus. So we'd like to take the direction right. We want long the index, long the whole China, then we will figure out the details maybe in a week or two.
Can you tell us how things are doing in the quant world in terms of trading? We've heard that there's been some glitches. Those have been shorting these index futures, as part of these sort of market neutral strategies have been facing margin calls in the last few days ago. Shen, have you seen those sort of margin pressures easing now, or are we still dealing with some technical issues too?
There's two parts of it. I'd like to say, I would say quantitative trading, quantitative investment is the future of the investment. That's a trend. That's a definite. But the risk is about program trading, is about margin costs. And the stability of the financial system should not take the risk of these fat fingers or excessive margin risk. So at this moment, I think the regulation targeting the basically pre-trade risk on these program tradings, which is great. At this moment, we haven't seen anything really bad happen in the market, in such a volatile market with record trading volume. And the exchange has a little bit glitch last week. They did not expect the basically record number of orders on the opening. Now they adjust the order processing matching system on the open. They give an extra 5 minutes to match the orders before the opening to avoid the basically huge, I heard it was like in the number of 300 million orders in the same seconds. So in this moment, we say in both in Shanghai, in Shenzhen, in Beijing, all exchanges work perfectly, runs on time. Regarding the margin call, I would say most market neutral strategy, typically in China, they long stock and they short index futures as a hedge. In that sense, when the index future rallied up, then you need to give the cash to the future exchange. In China is the financial future exchanges. So that's the margin call come from. It's not about the over leveraged or excessive risk. It's just a regular, say, margin call. All they have to do is reduce some stock positions and move the cash to the exchange on the next day, which I don't think that's a big deal.
Okay, I want to get your sense of where, at least back to investor sentiment. We've seen a massive amount, to your point, right? Because we had a massive amount of turnover in the market going into the long holiday, we had those glitches, and some of our reporting going into the first day of trade today that, some of the brokers were called in early to make sure to stress test the system. Where do you think the flows are coming from is my question. In other words, the amount of money that's suddenly being deployed into this equity market, is that domestic cash sitting on the sidelines? Is that coming from somewhere else? What's the conversation among you and your peers right now?
I think at this moment, if you put the investment community into retails, fund institutions, and basically proprietary trading, I think proprietary trading are probably keep that position stable, maybe switching some of the stock rotations. From hedge funds, they're increasing their equity weight dramatically as fast as possible. And the retails are using up their cash in account at this moment, and they're opening new accounts the first time. They probably, as I heard, in the last 2 days, during the holiday, there's about 2 million to 3 million new equity accounts opened among all the equity brokerage, and probably another few million on the way. So investors are coming to the stock market, try to take a taste of the rally. And also existing accounts are seeing cash coming in from their banking accounts. So people are moving money from their probably current bank account into stock trading account to increase the possibility of adding to their equity positions. We're seeing money coming from, I would say, all directions. Probably the whole week, this week, we'll see cash inflow in a big number.
Shen, you mentioned about right now it's hard to determine what sectors benefit from all the stimulus that we've heard so far. So focus on ETFs, as you mentioned. I mean, when can we start looking at individual pockets of this market, right? Because the guests that we talk to say you got to focus on consumption, non-bank financials, SOE trade is still very strong, even though it seems like a defensive play, but it's not. When do you start tilting towards more of those sort of trades?
This one will be my personal view. Probably does not represent other investors. I would see there's a huge focus on basically dividend stocks in the last year or two. The stocks are in the hands of insurance companies and some large financial institutions. Going to the end of third quarter, now it's the fourth quarter, going to the end of the year, they might want to lock in some of the gain they have, actually huge gains in these sectors. So there might be something coming in the selling coming, just lock in. They might reduce their positions in these stocks. You might see some selling in these dividend sectors. People are interested in right now the government talking about new technologies in EVs, in semiconductors. So people are showing confidence in these basically new industrial revolution type of stuff. So people are moving their money into particularly we call enterprise board, and there's a science enterprise board in Shanghai. You will see both, I would say, I'm still talking about index. These probably rally more than the traditional CSI 300 or Shanghai 50. In the sector-wise, actually, semiconductor lagged the entire market in the last few days, and the biotech is a lagger as well. Hopefully, we'll see some rally in these sectors.
Shen Yi, it was fantastic to have you on. Thank you so much for joining us this morning. Shen Yi, their CEO of Shanghai Shen Yi Investment. Coming up next, we'll be live.